Hello. So, oh my goodness me, what a lot of noise we're seeing in markets at the moment. Stocks have crashed, then they've rallied. People are falling over each other to buy government bonds. That is not going to end well. Gold is at 7-year highs. Oil has capitulated. Industrial metals crashed. They're rebounding as well, a little bit. It's just noise, noise, noise everywhere. And yet, there is one essential strategic metal that has quietly, discreetly crept to 4-year highs. I'm talking about uranium. Now, stealth bull markets are the best kind of bull markets. Nobody mentions them. The media aren't on board yet. The story hasn't broken. The narrative isn't out there. And yet the asset in question creeps upwards. And we could be in the early stages of one of those, a stealth bull market. I stress the word could. There have been plenty of false dawns since the uranium mania of 2006, if any of you remember that. It was one of the most amazing bubbles you will ever see. But a supply shock has long been forecast in uranium, and it may finally be here. Now, COVID-19 or not, there is no shortage of demand for electricity, and nor is there likely to be. And for all the investment that's gone into clean energy, fossil fuels still account for more than 65% of world electricity demand, most of that from coal. Hydropower accounts for 16%, wind and solar about 6%. Nuclear power comes in at 10%. And China is by far and away the world's largest electricity consumer. And for those of you that like your stats, China's electricity generation came in at 7.3 pWh, that's petawatt hours, last year. The US comes in second at around 4 pWh. And on a per capita basis, the world's largest consumer of electricity is not, as you might have expected, the US, but, I didn't know this, Iceland. And it kind of makes sense when you think about it. It's cold and power's cheap. And hot on the heels of Iceland come Liechtenstein, Norway, Kuwait and Bahrain. With the exception of Liechtenstein, all have large amounts of cheap energy. And around 69% of China's electricity is generated by burning fossil fuels, mostly coal. And air pollution is a big problem. And nuclear power is seen as part of the solution. Although currently it only accounts for 4% of China's electricity generation. And that 4% comes from 45 nuclear power reactors that are currently operating, and that's hoped to increase to 56 this year, but it takes a long time to get a nuclear power station running. And China's stated goal, and it has a habit of meeting its goals, is that by 2050, that 4% of China's energy will be 28%. That's a huge uptake in nuclear power. In the US, on the other hand, already around 20% of American energy is nuclear generated. So there's no shortage of long-term demand for uranium. We talk about supply next. The world's largest producer of uranium is Kazakhstan, produces about 40% of global supply. It's the Saudi Arabia of uranium, followed by Canada, 13%, Australia, 12%, and Namibia, 10%. So the world depends on 4 countries for 75% of its supply. And it's something like 2/3 of supply comes from just 6 mines. And this is an extremely vulnerable situation. Now, Kazatomprom is Kazakhstan's national operator and the world's largest uranium producer. And it announced last week that all uranium mines in Kazakhstan will cease production for 3 months to slow the spread of coronavirus. And Kazakhstan's major cities, meanwhile, have also gone into lockdown. Or I think it's 6 of them have. And the week before, Canada's largest oil producer, Cameco, said it was closing Cigar Lake, which is the world's largest uranium mine, for at least 4 weeks, following directives from the Canadian and Saskatchewan provincial governments. And other North American operations are similarly being mothballed. Denison Mines has a large mine in development, and it's suspended its environmental assessment. That's the Wheeler River uranium project, quite a big one. It will be when it eventually produces. So to Namibia. Now, Namibia is a key supplier of uranium to China, and Namibia has closed down all its mining until the virus comes under control. And the Rossing mine in Namibia, that's operated by a state-owned Chinese company. And by the way, if you think things are tough here in Europe, 25% of Namibia's national income comes from mining, and the whole industry has been put on hold. A quarter of Namibia's income just put on hold. So Australia hasn't been as hard hit by COVID-19 as anywhere else, and it suddenly finds itself under this incredible scrutiny, the scrutiny of the uranium investment world. And its uranium junior mining companies have been going bananas, a lot of people making a lot of money. I'm wary about chasing junior mining companies. The question is this a new bull market, or is it a temporary situation brought on by COVID-19? And that's the big question. But the fact that this market was always so vulnerable to a supply shock because it was so dense in a few mines, now we have it. COVID-19 has brought it on. Now, the uranium price has been locked around the $25 a pound range for about a year. But this last fortnight, it's broken up to $31 per pound. That's 3-year highs. And now that's promising. But we have a long way to go to get back to the 2006 highs, which were over $140 a pound. $31 today, $140 the old high. And that's when uranium mania swept the world. Now, one way to play this is to speculate in uranium mining companies. But what is the point of buying a companies whose operations are currently suspended or about to be suspended, you may ask? And I tend to think the same way. That's one of the problems we have with mining. And suspended operations can drain capital fast, although I imagine a lot of mining companies will get bailed out. So those companies whose mines are at the exploration or development stages, they're not producing, they may see better gains because the value of their ore bodies is being re-rated. But it's not like a great deal of actual development can actually take place until further notice. So it's simply just a revaluation that you're hoping on. And even there, they drain capital. The safest way to play this, and the way to avoid operational risk, is to simply play the spot price of the metal itself. It's less racy, but your risk is a lot lower. And there's a London-listed company called Yellowcake, trades under the ticker symbol YCA, and it's been set up with this purpose in mind. It's basically a uranium holding company. You buy the shares and hope the value of its uranium stockpiles increases. And it currently holds, I think it's 9.6 million pounds of uranium, which at $31 a pound gives it a valuation of about 240 million pounds, $300 million. And currently the share price at 220p has a market cap of 190 million. So you are getting it at quite a big discount, £50 million discount to its net asset value. But don't get too excited about that because holding companies almost always trade at a discount to their NAV. So there you go. Uranium, very exciting. One possible way to play it. The uranium supply shock is here, but is this a veritable bull market? We shall see. Thanks very much for watching. Please subscribe to my channel and I'll be uploading videos as often as I can. Thanks very much.